Hey traders, happy Monday. Chris Pulver here. Welcome to the weekly outlook, the week of July 13th through the 17th. We're going to be talking about all things stocks, forex, cryptos. It is a very important week. Heavy earnings coming out Monday through Friday. We have Pepsi, Delta, Chase, Wells Fargo, Citi, United Health, Goldman Sachs, eBay, Johnson & Johnson, Domino's, Morgan Stanley, Netflix, and BlackRock. Here's a screenshot of that if you'd like to see. Some are before the market opens, some are after market hours. Why is this an important week? Well, for the last month, we've essentially seen a disconnect between reality and the stock markets. Now, at the end of all this, the stock market is still tied to earnings. Okay, the stock market is still tied to the health of the economy. It's still tied to these corporations that make up, the public trading arena. So with the Fed expansion and the Fed support and the Fed essentially having the stock market move in lockstep with it, it's weeks like this where we start to see our companies doing better. What is the corporate landscape as far as profits? Is there a justified reason for stocks to continue to get stronger? For the most part, if it wasn't for big tech, if it wasn't for your major companies like Amazon, Apple, Microsoft, Facebook, Google, without the support and without the overperformance of them, everything else would be struggling. And there really wouldn't be a justified reason for the stock market to be as high as it is. So that's why this week matters. That's what I'm paying attention to. And I want to see how this plays into the US indices, how this plays in the currency markets, how this plays into volatility. So let's go ahead and dive into the charts. We'll take a look at the economic calendar and get going here. So we understand there's risk in trading. Please and always use trade capital only and do not trade with money you cannot afford to lose. If you need to take a screenshot of that, feel free. That's what's coming out this week. Also, last week's movers, we had the Dow Jones up around 1%, the S&P around 2%, 1.76% to be exact. The NASDAQ, big run at 4% for the week. Bitcoin holding steady just above $9,000 at 92.71, and the 10-year Treasury note at 0.643%. Now, let's take a look at the calendar for the week. We should have a pretty big high-impact event. Took a look at this last week and remembered that Monday, last week was a pretty light week on the calendar. This week is not. So in addition to a ton of earnings in the stock world, we also have a lot on the plate for the Forex market. So we have Bank of Japan outlook report, policy statement, as well as a rate decision. We have a Bank of Canada rate decision with a statement and a press conference. We have New Zealand CPI quarterly news. We have Aussie employment news. We have China quarterly GDP. We have an ECB refinancing rate, also rate decision, policy statement, and press conference. We also have core retail sales for the U.S. on Thursday, and Bank of England, Governor Bailey. So Carney is out. Governor Bailey steps in for the Bank of England. But this, compared to last week, you can see very light last week, light the week before, light the week before. So we're starting to get a pretty heavy dose of news for this week in the currency world. With earnings, I would suspect that, I understand it's only the middle of the month, but we might see some decent volatility. Take a look at, some of the charts today. There's some great technicals out there. We've had a good run the last couple of weeks. Even though the markets have not delivered a lot of volatility, we've been fortunate to make some really nice pips and profits there. So let's go into the charts. I want to take a look at the SPY, take a look at the DIA, the QQQ. I saw some interesting charts over the weekend, just reading up on some articles out of New York Times and following some decent financial outlets on Twitter. So let me get my charts to load here. So here's the SPY, or the ETF, for the S&P 500. We know that the February high is something the market is coming up to, but we can't forget about the larger broadening formation. So what does that look like? It looks like this. We have all these highs being connected, all of these lows being connected, and we're sitting here off of the February high down to the March correction. We have made a 40+% recovery and nearly come all the way back to the highs. Now, the NASDAQ has made a higher high, so we'll take a look at that in just a second. But coming down here, recovering most of the way, I think that we're going to be dealing with this. You can see that we had a sell-off right here. That was about 4 weeks ago now. We have not taken out that high. We have not taken out that low. We're dealing with volatility and indecision inside here. As it relates to summer trading, we're probably going to see either volatility that stays stuck within this area or maybe some low volume drifting. I read an article this weekend that the E-mini futures market, the volume is like 60% less than what it was earlier this year back in March and April. So we're dealing with a little bit lower liquidity. We're dealing with lower volume. And I think that's also why we're seeing more of these kind of drifting trends, more of these stubborn trends where there's not a lot of balance. You're not seeing, market push higher and then pull back, seeing that the market pushes higher and then keeps drifting higher. Now, eventually that should come back in balance. It's just a matter of when the sellers are ready and when the bulls are essentially taking profit. So things get overextended, things get extreme, and they will balance, especially in the Forex market. But taking a look at the stock market, this is what I'm watching. This low is important. This high is important. If we keep drifting slightly higher, look, bring it on. Let's get to this high. Let's get to this gap. But we're probably going to deal with some of this. I would expect this type of behavior to play out until we have a bigger catalyst. This could be COVID related, could be presidential election related. The big question mark, I think, in my mind at least, in addition to earnings this week, is when school is starting up at the end of August, early September. Not just K through 12. Are parents willing to put their kids in school, 8 hours a day, 5 days a week? Are they going to play sports? That contact is a huge question mark, and I don't think schools are equipped to handle that type of testing. That's K through 12. Universities, same thing. You're bringing on, anywhere from 10,000 to 50,000 plus students from all walks of life. It's just creating a huge mess. And again, fundamentally, there is no shortage of reasons why the markets can't fall. So am I saying I want it to fall? No, I'm not. But I'm saying I want there to be some semblance of reality here and something that we can trade. So yes, volatility is fine. Indecision is going to be something we have to survive right now. But I think indecision is going to be short-lived. I think indecision over the next maybe 2 to 4 weeks, maybe as we get into August, September, that's indecision. But usually September, October, higher volatility in the stock market, which will lead to higher volatility in other markets. Then, of course, once you get past through September, October, we're talking U.S. election. We're going to have movement. All right. So I know that coming out of summer trading, my decision is going to be trade the momentum, stay with the technicals, trade what I see, trade what we can easily confirm, and not try to make these big predictions, these bold predictions of where the top's going to be, where the bottom's going to be. Because if we did that back in earlier parts of the year and then we were surprised by March's volatility and all the craziness, that's what I don't want to have happen to me again. So I'll be more prepared to follow and hopefully be extremely profitable and thankful that I'm just following the flow. So the SPY, there we are. Are we going to deal with more sideways movement, not taking out this high, not taking out this low? It's understandable why we could just stay sideways. If we drift up towards these highs, there's not a better opportunity to short. There's not a better opportunity to look for volatility, bullish volatility where we start to see the VIX start to drive up, the VIX starts to rally again. But where is that at? I would be interested in shorting the stock market at these highs, but I don't want to fight the Fed right now. I'm not nearly as, like I've said before, I'm not nearly as excited as I was back in January to short the stock market. We might get up here with the artificial propped up supported markets and it might still go, but eventually it's going to be down. It's going to end badly and I can't get this to work. I guess I'm going too fast. All right. So let's move on. So that's the SPY. Let me go to the QQQ. That reflects the NASDAQ. And I'm just going to draw a couple of connectors. Let's go to the weekly chart and take a look. There we go. So let's connect these lows and let's connect the highs. So we're going to connect those lows as trendline support, and we're going to connect these highs as resistance and a broadening formation. So we have been making the slightly higher highs. In fact, it probably looks better if I connect it right here. So I'm going to connect these highs, and that should go in line with our high from February of this year, right in here. There we go. So if we connect those highs right there, again, there is resistance. We are noticing here that we are back into overbought territory. Our momentum indicator, any signs of these marginally higher highs with disagreement, it just seems like a perfect spot to look for this structure on the lower time frame. You can see the broadening formation on the weekly. Let's go into the daily. And if we break that structure, we are in a very steep bullish trend. And that's all been enhanced by the central bank support. So this is what I'm looking for. We just keep breaking a little bit higher. That's fine. A week like this week, any negative sentiment, any reason as we transition out of July into August for the market to show a strong sell-off again. Maybe it is a strong sell-off. Drawing tool's cracking me up. So any strong sell-off in here, anything bearish, anything certainly in this area is wide open for a breakdown. But keep in mind that it might not be the case. We might see it break back down into support, have a 3 to 5% dip, it gets bought back up. 3 to 5% dip gets bought back up. And we've seen this play out. Look at this. There's a little dip. There's a little dip. There's a little dip. We could still do this until this decides to actually break the structure. So for me to be more confident of a stock market bearish move, we have to break this trend line. So that can take some time. So if you are holding inverse ETFs long, if you are buying puts and trying to sell the stock market or these ETFs that are optionable, then I get it. I mean, it's tempting. It could pay a lot of money. So as always, it comes back to choices, equity management. So I'm choosing to trade confirmation. I'm choosing to follow momentum. And that's it. I mean, I'll try to keep the trading as simple as possible. And if we have the same as we've seen the last couple of months and it just keeps drifting higher, okay. It doesn't really make any sense. It doesn't make sense to a lot of people, but I'm not going to fight it. But if we see the structure confirm that it's starting to change and show the signs of bearishness and starting to get some bearish sentiment and fear is kicking in, volatility is kicking in, we'll trade that too. So we just have to be ready for anything, and that's what I'm choosing to do for the next, 6 months. But let's see what the next week gives us. Let's see what earnings gives us this week. Let's see what this busy economic calendar gives us in Forex. So on that front, I will be looking for, stock-wise, there are certainly some stocks I'm watching. I noticed here in this section we have BlackRock, which is going to be a big one. I mean, especially if the Fed is doing work with BlackRock to actually buy stocks outright. First Horizon Bank, which I did make about 40% on earlier this year. If we have some healthy numbers, I may get back in, but I'd preferably like to see a dip. Wells Fargo, same thing. Delta, some of these airline stocks, Citigroup. I mean, there's a lot of big players in here that if we're seeing, strong earnings, okay, I can see a little bit more sense of justifying why the markets are as high as they are. But if it's carried by the Fed, carried by central bank support and the big five or big tech, this starts to really paint a pretty gray and murky outlook. So I'm patient on stocks, as I said. I'm patient on cryptos, and I'm trying to be as active as I can and as profitable as I can in Forex. So thankfully, I have some good robots and systems that are working well. My perfect storm strategies, my equalizer right now are killing it. We had a great, manual trade with some automation last week that paired up. It was a nice tag team effort to end up nearly, it was like 1,800 pips last week in the Forex market on, a handful of trades and some robot trading. So really happy with the actual performance. I think we still have a couple more weeks with that, and then hopefully our technical outlooks on the higher time frames start to pay out as well. So on that note, I'm just going to find some goodies for this week. I still want to go back to the old Aussie Cad. Aussie Cad still looks really good to me on the 4-hour chart. The extremes are still there. We're just starting to look at the right side of the trend line. There's certainly enough news this week. We are at 409 bars overstretched on my right trader max system for the Aussie Cad. Let's get this to the 4-hour chart. Actually, the daily chart's fine. I just want to see if price will get on the right-hand side of the trend line. So we're right there. You can see the indecision once again at the top. If we are going to fall, will the news allow it to fall into this area here? Can we fall into this area? Can we come back into these lows around 9,100? Anything below 91, I'll be happy with some profit. So I am currently in with a break even around 93. So I'm upset down a little bit. But if we fall back into 91 or lower, I will definitely be taking profit on that Aussie Cad. Again, this is for me, it's a right trader max reversion strategy, which means we are overextended. We have gone too far, too fast, and this trend, which has been bullish here since the bottom of March, needs to balance. So I'm looking for a balanced trend. This currency pair is also historically very well balanced. So even if it gets a little bit overextended like it is, I suspect it's going to balance back around 91 or 9,000. Aussie Cad is a good looking one. New Zealand Cad is another one. This is one of my favorites for the week. We did have a slight change. So couple things for easy confirmation. If you're watching this New Zealand Cad, wait for a trend line to break. If we do fall, we should be falling back into 86.50 or lower. And we have an excellent weekly pattern here. Take a look at this chart. This is a weekly chart. And going back for quite a while on this weekly chart, this currency pair is essentially all harmonic patterns. So this goes back to 2009. You have over a decade of price action, and pretty much 90% of this entire region has been harmonic after harmonic after harmonic. And what do we have right now? We have a harmonic. So this is a weekly harmonic pattern. This is a butterfly pattern, a cipher pattern, and we are into this. I hope it's an extreme enough to set up. Here's your setup. So this red area up above 92.50 is my stop, but I'm looking for confirmation to start to sell this bearish and get it back down into 8,600 to 84.75, or down here to finish the move around 83.75. So we were long here and we got paid on that. So I'll use a different tool here. So we were long down here. We were paid right there. So now we're looking to get short, and hopefully between this green line and this green line, we're going to get paid on those profits as well. So we are looking for opportunities to confirm bearishness. As I showed on the daily chart, just go into your candlesticks, look for a trend line break, or you can start turning on some robots or systems to short. So anything on the right-hand side of this trend line should be pretty solid. Break the trend line, pull back, and fall. Break the trend line, pull back, and retest the high and fall. Break the trend line, flag a little bit, and then fall. But we should be looking for some structure over here. Again, for this week's calendar, we do have some New Zealand news. So CPI news for the quarter at 6:45 p.m. on Wednesday. That's technically going to be Thursday's trading day. Same thing with Aussie news at 9:30 p.m. on Wednesday night. So a little double dose of New Zealand and Aussie news for Wednesday night, Thursday's trading day. How does that play into it? Hopefully technicals work because of it, and we start to see New Zealand CAD dropping, breaking the trend line, confirming. Same thing with Aussie CAD. Aussie Swiss, Aussie Yen look really similar. Take a look at these. So Aussie Yen, for example, we're not breaking the structure to the downside. Don't be surprised if this market finds a way to retest the highs. So if we retest the previous highs right around 76 and change, retest the highs around 76.60. So this could be very slow. This could be really choppy, but we could still make a run into these highs. Equal highs, look for disagreement. If we get back into overbought conditions, that would be a great spot to look for a shorting opportunity right there. And even if it's conservative, short the high, take some profit. Short the high again, stop area is pretty clean. Look for confirmation. Take profit at the lows. Could it drop lower? Of course it can. Could it come back down to March's lows? Of course it can. But I'll take profit here, and if it goes lower, then we can sell it. Again, we can always re-enter, but I'm looking for an opportunity to short this nice and high. So Aussie Swiss, Aussie Yen, New Zealand Swiss, they look really similar to retesting these highs. And from there, that's a good spot for profit taking. Overbought conditions, I want to make sure that we're trapping profits, protecting profits, closing positions if we are long, and then looking for fresh positions to start shorting. Okay, we've also had some movement on the dollar. Here's the euro dollar. I'll go to the dollar index here in just a moment. So the euro dollar is heading up towards 13.50. I'm curious to see what it does around 1400. Can we get up into 1400? Can we get up into 1450? If so, I am looking for an opportunity to short it. Now, again, it would be a rejection candle, bearish confirmation needed. Try to short this stop area above. Look left on your chart. That's resistance. So we have the previous highs right around 1460 to 1480. That's the wick high. The closes are around 1450. So that's where I'm looking for a short position. I do have a pending order in my broker platform at 1450 with my stop just above 1500. So I'm trying to get into that trade. If you don't want to just set the pending sell, you can certainly just look for turning on a system to short it, look for confirmation. So let's switch gears here to the dollar index, again, correlated with the dollar Swiss and euro dollar. We did break this recent trend line, and I'm looking to see, will this end up going down? So if we come back down into this previous low right here, do we come back down into the March low? If possible, bouncing off this area and starting to head higher, come back to equal highs to the backside of the trend line, have more range conditions. Take a look at this. Support around 12,100, resistance around 12,600. We could be range bound on the dollar index. Now there's also discussion of a weaker dollar across the board, and commodities continue to get stronger. If we see a resilient stock market, a lot of times the sacrificial lamb of the stronger stock market is a weaker dollar. Based on the high of 2016, look, we've got a pretty compelling case for this area to be a bearish pattern. And my tool is not working very well today for whatever reason, but hopefully you can see what I'm talking about. We have this right here. I'm going to use the chart freehand. So we have a left shoulder, head to neckline. If this consolidation is the right shoulder, we break down and eventually go back into these 2018 and 2015 lows from the dollar. So either we'll see range bound conditions on the dollar index, or we will just start making this drop sooner than later into Yearly pivot at 12.302. Previous low, all these pockets from back in 2018 when the dollar became very strong, or these early 2018 lows. So that's the bigger picture on the dollar index. We will see what happens. We'll see what happens. We'll be watching. But right now on the daily chart, we're probably path of least resistance heading to the downside for the dollar index, which means we should see a euro dollar heading to the upside, possibly a dollar Swiss heading to the downside. My arrow's all over the place. Possibly a Aussie dollar heading further and drifting higher, a New Zealand dollar heading and drifting higher, a dollar CAD potentially drifting lower, a pound dollar potentially drifting higher. So the basket itself is something to watch. I think the dollar yen is going to be stuck with, risk off, risk off, risk on, risk on. They're both safe haven currency pairs. Safe haven, if I didn't specify that, safe haven currency pairs. So dollar yen are probably going to be moving pretty tight, and yen pairs in general will probably pick up in and around the election this year, or be correlated to, pretty tightly to the stock market. So I think the dollar index is going to continue to slide, but I would suspect that there is some pretty decent support right in here, right in here, right in here, 12,100. Some decent support on the dollar index. Okay, that's dollar index. Let's go to dollar Swiss. A couple of other pairs that I'm really interested in for this week. If you're taking notes, I'll just tell you. We'll go into the charts here in a moment before I wrap up the video. Aussie Cad, still very interested in. New Zealand Cad, very interested in. Pound Aussie was my trade from last week that we ended up grabbing 862 pips out of. Very pleased with that overall, and there's still some room in that trade. So I'm going to take another look at that one. Euro Aussie is another one for this week. Dollar Swiss, I'm just going to say range bound on dollar Swiss. I do have a pending buy at 92.50, so I'm looking to buy this low and see if this will stay range bound from 92.50, either back up towards 95 or all the way back up here towards 97. But I remain kind of medium term, long term bullish on dollar Swiss. The Euro Swiss I saw today is starting to pick up some legs to the upside. I've been waiting to see, can we start pushing bullish? And it does seem to be breaking. Now, this is not done. We've had some promising days of bullishness before over the last couple of weeks. But of course, one day bullish ends up giving it all back. So I'm really wondering where today finishes and where this week finishes. We do have an ECB rate decision this week on Thursday. We have, obviously a lot of news out there that the market's going to be digesting. But from this pattern, this low to high swing, this was corrective. So we have an impulsive wave to the upside, correction to the downside. I'm looking for another impulsive wave to the upside to get us back into this yearly pivot at 1.1045. So hopefully we're starting to turn the corner. I do have some buys in here around 106.50. I do have a buy here as well at the lows around 105.25. So I will be watching the Euro Swiss this week. I'm holding this one still medium term, trying to get this back to 110 and 110.50. The pound Aussie, let me go to that trade. So we took a good chunk of profit on this one last week, and I want to see if we are still available for a chance to buy it, and we are. Yes, we are. That's good. Go to the 4-hour chart on my right trader system. Let me load up the colors. Perfecto. So we had an aggressive buy zone that I boxed out. We had equal lows. We had oversold conditions, lots of divergence, all the things we want to look for. We were buying it extremely low. We were filled at 79.20, which the lows are right there around 78.70. So we bought it nice and low. We added some positions. We stacked up some orders. We came back into our shaded, or close to our shaded zone, but we came into our ribbons. Now I am interested in trying to buy it again at these lows. If this is a transition from high to low, and we're starting to go from this overall, try this one more time, overall, it's not letting me draw it for some reason, overall sell zone, which lasted through most of April and May into June, we're starting to go sideways. So if this just goes sideways a little bit longer, let's see if we can either make that extreme low and then start bouncing up, or this just transitions from sideways movement into a buy zone. So I am expecting the bigger move over the next maybe 2 to 4 weeks to be a bullish trade on the pound Aussie. So I'm interested in scooping up some bargain levels with an extremely high probability of getting back to this shaded area. So watch these lows again. All right, watch these lows at 79.20, 7900. Watch these lows to get some trades. Again, I would trade this really small. I'd trade this really conservative because there's no guarantee that's the low. But if we buy it nice and small, probability is we're going to make a low. run back up into the shaded zone, and hopefully start transitioning into a bullish buy zone. So there's still some opportunity for us here on the pound Aussie this week. Also, I can take the exact same setup and pattern on the Euro Aussie. And we've been talking about this one for a while, trying to get buy trades around 1.60. And again, you can see that the red ribbon is available here in the short term. We also have a shaded zone that has not been hit in over 400 bars. So what am I trying to do? I'm trying to buy it down here. I'm trying to buy it around 1.6050 on the Euro Aussie. If it goes a little bit lower, 6,000 is a round number. 5,900 is major support on the daily and weekly chart. So my target this week on the Euro Aussie is the shaded zone. Now, right now, that shaded zone from current price is around 120 pips higher. Could we come back to past support to become resistance? Of course. So the shaded zone is in the way, but if we hit it, that's 120 pips of movement in our direction. If we come back to previous support becoming resistance, that's 275 pips away. Even better is if we come back down to the lows, which is around 1.6050, and then we bounce off the lows into the shaded zone. Now we're talking 270 pips. If we go all the way back up here to past support, we're talking 400 plus pips. So whatever price action does this week, we will be watching. Similar to what we did on pound Aussie, is if we have a good test trade at these lows, we can put in some buy stop orders and we can get filled as price goes our way, add to our winning positions, minimize the drawdown, make our profits bigger. Let's get to the shaded zone this week. Let's get into this, past support resistance level this week. So Aussie's on the plate. Once again, this seems like a broken record. We talked about Aussie weakness, the necessary basket alignments for the last probably 3-4 weeks, but it keeps drifting. All right. So part of that is commodity pairs are stable and strong. There's still some risk appetite with a supported market. There's a weaker dollar. So all those things are continuing to kind of support and help the Aussie stay afloat and stay drifty. Here is a currency strength chart for today. You're going to see that your commodity-based pairs, this is your Aussie and your CAD and your New Zealand. The euro is actually getting pretty firm this week for whatever reason. Usually the euro is right alongside the dollar, the Swiss, and the yen. The yen here is taking a nosedive for just today. Again, volatility-wise, not super strong or weak, but enough to notice some disparity where we see the euro and the Swiss moving to the upside. That's a good thing. The yen pairs, the yens are giving back some of those sell-offs from 3 or 4 weeks ago. We're probably going to come back and test some of those highs. So I really like Euro Aussie this week. I really like pound Aussie this week. I really like Aussie CAD, New Zealand CAD. I'm watching dollar pairs. As always, I'm watching a little bit of everything. I also have my eyes on my robots. For the last couple of weeks, look, last week was a crazy good week for robots. My robots with full automation generated over 1,200 pips profit. It was my perfect storm robot. It was my equalizer robot. I've talked about these robots for the last month and told traders these are going to be my summer robots, and they are, and they're kicking butt. Now we're picking and choosing our manual trades, and we're doing pretty well with that to add to it. But to finish the week last week with 1,800 plus pips and 1,200 of that's with robots, throw in a couple manual trades. I mean, I'll try to do whatever I can to make some profits on pound Aussie again. Euro Aussie, again, if we have a nice lineup there or get filled at a better price, Euro Aussie is going to be fantastic. Aussie CAD, if it finally turns the corner and goes south this week, to head back into some of those balancing points and pockets around 9,100. New Zealand CAD with that weekly harmonic. I mean, those to me are really good looking trades. Euro Swiss I'm watching because that's a big payday if we get to 110, 110.45 for that yearly pivot. So that's what I'm watching. That's what I'm trading. That's the currency world stock wise. I'll look and see what the earnings are. I want to, keep tabs on things for this week. Stock choices, companies I want to buy. I'm either riding tech right now. I'm sitting in cash. In fact, what is a staggering statistic can be seen right here in this article. This is actually on the front page of MarketWatch.com today. Investors face a scary out of whack scenario. Just look at this chart. This is the Wilshire 5000. Which I don't even know what that is, but it's a market capitalization weighted gauge of all U.S. stocks. And what it shows here is that without Apple, Microsoft, Amazon, Google, Facebook, you would actually be outperforming the market by just sitting in cash. But because of the hefty performance and the amazing performance of these giant tech companies, the stock market has rallied. So what this article is saying is that because so much weight and clout is put into these 5 companies, they can also single-handedly bring the market down with it. So if there is a reason for these to drop, the market's coming down with it. So that's the scenario here. And you can see it summarized here. The entire market has become totally dependent on just 5 giant stocks with an immense concentration of power that have now come under regulatory scrutiny. So just as these stocks pull up the entire market, they can pull down the entire market by their sheer weight. So I thought it was interesting. Is there a reason for these companies to not do well in this current environment? Not necessarily, but again, the disconnect between reality, earnings, are we going to really price in the entire performance of the major indices by 5 companies, or is it called the S&P 500? Is it called the Russell 2000? I mean, there's other companies out there that matter, other earnings that matter. We have other sectors that are doing horrible compared to what's doing well. So that disconnect is at some point, and this is what happens: the markets can get out of whack, they can get irrational, but they will come back in balance. So that balance is probably going to be highly volatile and really ugly, but that's what we're bracing for. That's what we're preparing for. So anyway, my focus this week, same as always, right? We're going to take good trades. We're going to be patient. I have some great robots running for me between the Perfect Storm. It's my Rainstorm, Active Storm, my Equalizer. I'll continue to run with those. Right Trader Max might be deployed this week. I have another class for my Momentum Breakout. I've been doing a ton of testing over the weekend, which I'm really excited to share this week on my class Wednesday. And I'm getting ready for an August deployment for my Momentum Breakout Max, which I have some awesome stats to show for anyone that's interested. You can check it out on smarttrader.com, go into Marketplace and look for the Momentum Breakout Max. You can also jump into my trading room on Tuesday, Wednesday, Thursday, the Flex Trading Room. You can see more about that at smarttrader.com/marketplace and try to find the Flex Trading Room. If you're sending me messages out there, a lot of messages I receive on Instagram. My handle is @pulver.chris, Twitter @pulverchris, Facebook, YouTube. Just type in my name. You can send me messages. You can post comments, which I appreciate. So subscribe to the channel, like the video, share the free education. Right? Share the video, like the video. I appreciate it. Send me those messages. I will go through those comments and reply. And that's it. Let's have another good week. Let's see if our robots can come swinging with some nice profits. We will take some great trades. Hopefully when they line up, we have a lot of news this week in the Forex market. We have a lot of news with earnings this week in the stock market. There should be some decent, even though some are trading, there should be some decent, if not high volatility that we can certainly profit from. So I'm looking forward to that. Looking forward to trading with each and every one of you. So have a great week, and I'll see you in the trading room. All right, take care, everybody. Bye-bye.